All right, so we're recording. Yeah, Swizzle man, thank you so much for being here with us tonight. We really appreciate having you as a kind of an ambassador for FOMO. Um, Love what you're doing with Risk On Pod, and yeah, it's really great to get to chat with you this evening. I got a bunch of questions for you.
Cool. Yeah, no, I'm excited. It's been a new transition. In all my years of crypto, I've only ever focused on trading and just trying to, do things, operate in the space like behind the shadows. And I think we just hit a point, a few of us, where we were like, you know what? It really started where we were hungry for some content that didn't really exist, where we were like, man, all the podcasts are either or spaces or whatever are either like super hyper degenerate where it's just like chaos in the spaces and there's 15 people on stage at a time, or it was like these super buttoned up things like Unchained podcast or whatever where it's like kind of the suits talking, and it's like it's just not super relatable to us as traders or helpful. And so we are like, maybe we can split the difference where we're just slightly not degenerate enough that we can be educated on what we're talking about, but we actually are like going over the stuff people care about. And like, obviously like FOMO is kind of the embodiment of that, where it's like a super clean product, but we can all do the shit we want to do on it. And so, yeah, I'm happy to be here. I haven't been in one of these before, but happy to talk about whatever you guys want to talk about.
Yeah, so basically kind of the way that these tend to roll is I just am gonna fire questions at you for as long as you're willing. Um, we have, quite a few younger traders or kind of newer traders here in the Discord. And so I tend to focus these conversations around just like kind of big picture, looking for lessons, looking for advice, looking for, how pros like yourself treat trading, how you think about things. And wanted to have you on because, well, of course, your affiliation with Risk On. But I've just, I've been following you for I don't know, probably the better part of this year. We have quite a few relative mutual friends. Um, and, I've just always heard really cool things about you. You're the diamond handed guy. You're the guy that like will not sell. And so I kind of want to like go down the rabbit hole of that philosophy. But before I do that, I'd love for you to kind of tell us about your history with trading. What got you into it? Did you start in crypto? Did you start in equities? Like, how did you get involved in trading to begin with?
Yeah. Well, it's funny. I pulled up my Uber or my FOMO account, and it's like the worst characterization of me as a trader you could possibly have, because I took that huge loss on Ubit, the Ubit token, like a month back or something like that. And so I'm deep in the red. So I promise I'm not a perpetual money loser. But I haven't had the best performance on FOMO to date. Um, but yeah, sorry, what was the question? You wanted to talk about like
Yeah, just
like
kind of,
my
yeah, how your origin story. How did you get involved into trading? Did you start in crypto? Did you start
right.
elsewhere? Just kind of tell us how you got going in this world.
Yeah, so originally I was not in the finance world at all. I was actually working in a completely different industry. I was in professional sports. Like I kind of had a super boring equities portfolio where I was just basically in the S&P 500, and like, like the classic story of I didn't know enough where I didn't want to take risk or do anything. It was really just a way for me to hold things as a placeholder, and I was living off, cash flow, paycheck to paycheck and everything. And around the end of the like DeFi cycle, I came in, and really it was like the early days of NFTs is when I had bought and sold Bitcoin here or there over the years, but like I really started to get wrapped up in the trading aspect and being more um, like involved in the ecosystem around in 2021, I'd say 20. Actually, I would say it started in 2020 when the whole GameStop retail trading kind of went crazy on Robinhood. That was like what sparked the idea of like, oh man, there's a lot of shit that can happen where, if you know what's going on and you follow things, like this whole concept of like momentum trading kind of stuck with me. And I was a terrible trader during the NFT days. Like I, I was kind of doing what I think a lot of us who have been around now for a while now know to be like the signature, like the things you don't want to do, which is like have a list of the top KOLs and see what they're tweeting about. And then I'd be like, following, tailing them into things. And I found myself constantly buying the top. And I was just borrowing conviction. I was really swimming, like trying to learn, but also trying to trade at the same time. And granted, I was, trading on a much smaller portfolio size. And so, what I've learned over the years is like you have to adapt your trading style as things change. But like for the first couple of years, I was really just like trying to survive. Like I would try to not put more money in, and I was determined to like grow up a stack. But this is when FTX happened, it imploded. And so obviously I found myself, being down pretty bad. Um, and I think the best thing I ever did was when the bear market hit, for whatever reason, I don't really know why, I chose to stick around. And I think part of it was based off of like when the NFT rush was happening, I knew there were these kind of like circles of people who had been around a while who had all these group chats and everything, and I just couldn't get access to any of that. Like, I was literally just going off of whatever information I could find on Twitter, like scavenging Magic Eden and like salon art back in the day and everything, and like I think when the bear market hit, all of a sudden I realized I was like, wow, a lot of the people who probably would not have ever given me the time of day because things are so much slower, they were kind of willing to listen or let me into a chat. I remember I got added into this chat. It still exists called the Light on Telegram where I literally was like, hey, like I'm willing to aggregate information and like put like summaries of everything that happened on the day in there because I knew these guys were good traders and I respected them and they'd had a bunch of success. So I really started doing that where I was like, can I just do anything, educating myself, providing myself as a resource to people to get myself in the door. And so I was, putting together daily newsletters and like just like kind of was aware of everything going on. And ironically, I started to like get better at trading NFTs as that happened. And so like it kind of I felt like as I learned how all this stuff worked, I started to kind of see some pattern recognition. And then I think it was like late 2022, all of a sudden I found myself getting some decently sized big wins on NFTs for my standards at the time that literally saved me from I was close to being zeroed out, and all of a sudden I hit a couple 2-3x's, and that's when like NFTs died. So right when I got good at it, it's like everything ended. Um, Fortunately, I had learned kind of some of that pattern recognition and had, was enough of just like being chronically online and talking to people that like what that enabled me to do was be really early to like seeing the kind of like meme coin super cycle or whatever you want to call it, seeing that all play out. And so I was just like an early adopter. And I mean, we can get more into like how trading style and everything has evolved, but like I credit a lot of what my success that's happened in the later stages of the last couple of years to like the disgusting failures I had early on and just like that decision of deciding not to quit and leave when I, had a bunch of my portfolio blow up during FTX. I think it was just staying around and like really using the bear market to like learn and develop connections. And then like, it completely shifted my mindset on how I trade from that point. And obviously like we got to a point where we were able to trade things that were a little bit more liquid than NFTs, which also helped. So I don't know if that kind of gives the origin, but that's sort of the genesis of how I got started.
Yeah, no, that definitely does. Did Was there like a trader or two in particular that took you under their wing, or was it just kind of the group inside that particular chat, like
Yeah,
as
there's
a
definitely
whole?
a few people who I view as like mentors who, I still talk to today. Some of them are more active than others. There's a guy named Shake. who's one of the he's a Boogle or was, I don't know if he still is, but like he was, very well connected and had been around. I think he was like, early in the one of the early bunk contributors and everything. Like he had a deep network and he was super generous where, he kind of was one of the people that pulled me into Solana during the NFT phase. He had one of the first projects ever minted there. There's another guy named Smoothie, another guy named Mintmant Mope. I don't think they're around as much, but these guys were like so good at scalp trading, so good. They had been multiple cycles around, and so like they kind of understood the dynamics of like the momentum cycles, when to be more risk on, when to be more risk off. When a narrative was kind of heating up, like these things that I think when you're uneducated or you're early on, you get caught in that FOMO mindset where you're just kind of seeing things and you don't really know and you're trying to chase momentum that you see, but you don't know why something's happening. They really helped me like figure out how to develop a thesis of my own and then like pre-position into things before the narratives hit. I know like this is someone I just met in the last year or so, but like you guys had Print God on I think this probably a month or two ago, and like he's the perfect example of kind of what I'm referencing, where it's like he doesn't care what the narrative is now. He pre-positions into things and he's fine if it doesn't hit, but he knows that like if what I think could happen happens, I am super well positioned and I'll just be in a position where I'm ahead and I can sell and take some profit and then ride it out. Um, these guys definitely taught me the ropes on that, where I shifted to start thinking about like, let's be anticipatory instead of reactionary. And I think that's like the biggest piece of advice I internalized in my trading journey was like learning to anticipate rather than react.
Yeah, I was gonna say as you were starting down that path of telling that story, I was gonna like shout out Print God because it sounded so familiar. Were there like specific nuggets of wisdom that they gave you that like helped you see the vision in that way? How do you develop that foresight, I guess? Like what did they teach you that allowed you to develop that kind of foresight?
Um, I think a lot of it is like experiential, where like the thing is, I don't think any of you guys are gonna go into like go into a new group chat, people you don't know that well, or even if you know them, like rarely are people gonna tell you while you're doing something, even if you announce it, like, hey man, I think that's probably a mistake. Like maybe don't do that. But they will make commentary afterwards, right? And it's like, oh yeah, like that was pretty clearly, a sell off, sell the news, something like that. So I think it was more like I developed a relationship with people, these guys, where I was comfortable enough with them, where it was like, hey, we're gonna have real like we can actually talk about shit and not sugarcoat it. And so it's almost like being willing to take criticism, and they could, give me shit for something, call me a top signal. And instead of like getting butthurt about it, it's like I would internalize that. And, it sounds funny when we're all just pretty lighthearted in this type of setting, these environments, but like I would go with those jokes and everything, but I would actually internalize it and be like, okay, like what was my mistake here? Was it like a process oriented mistake or was it a results oriented mistake where I just, it didn't work out, but I'm okay with the decision making? So I think it was really just like the dialogue after the fact, after I made mistakes. And my mindset with that and what I've kind of stayed with is like, hey, you're going to make a ton of mistakes because this is such a fast moving environment, but try not to make the same mistake over and over again, where you keep burning yourself, because that's how you die a death by a thousand cuts here. It's like you can chop yourself up if you just keep trying to do the same thing over and over again and thinking it'll be different. That said, like I also have a mentality of like I've developed a very risk on mindset in terms of like how I size into trades. And you made the comment about me being holding things for a long time. I do that intentionally, and it's more of a probabilistic decision. Um, but I think there's like a fine line between chopping yourself up and taking a bunch of losses versus understanding that one win can make up for, 10 to 20 losses or something like that. And so I try to find the balance between those two things. And like I do take big round, I'll round trip a lot on things at times because I'm willing to take on that risk knowing that that's where like the asymmetric upside is on stuff.
Got it. That makes sense. So you've spoken about kind of being both dumb retail and also a sharp retail trader. And what you're describing to me sounds like the move from being a dumb retail trader to being a sharp retail trader. Were there specific turning points during this process of getting to know these guys in this group chat, having them kind of, um, finesse you a little bit on some of the trades that you were taking, but then
Yeah.
learning from their feedback and their advice? Was there a turning point where it kind of felt like, not that you don't need them anymore, but like you felt like you had grown out of that need to have the yeah, those people kind of like monitoring you and maybe helping you? Was there a trade, or was there a certain situation where you kind of, yeah, I guess like felt
Yeah.
like you were that sharp retail trader now?
Yeah. I think it ironically, it probably happened as the shift into like the 2023 meme coin frenzy happened. Um, I feel like I was able to apply a lot of like this the similar things I had kind of gone through where I was call it dumb retail with the NFT cycle. Um, I had learned from that, had hung around, had been kind of like focused on what I had done wrong. And then obviously you still have to get the opportunities and you have to prove you can make a trade. I think what happened was like I just because I had been kind of so active and hung around when things were slow, I started to see these signs of things picking up. You started. I'm trying to think of like what the first tokens that like really like came out were, but like I remember like the Costco hot dog trade. Like I find it was a moment where I was like, man, I was finally super early to something. I think I bought a bunch of it at like 100K market cap or something, and it ended up running all the way to 100 million. And I was like, um, I was trying to think about like what, like as I saw the different indicators of it picking up attention, I was like, what would the old me have done, right? And then Whiff came along, and it was, I think like a real time adjustment of realizing like, okay, there's about to be new rules that are about to take place. Like this is not the same game, but a lot of the same concepts are going to apply. Um, and so you know, I I felt like when I would find things early, I started sizing into them as much as I could stomach. And obviously in the early days, like pre-pump fun, these things were not like day long or even week long like momentum trajectories. It was, Whiff was like a multiple months type of run. And so it was different time frames, but like I felt like I was just early to being able to see how like like what would happen with a successful coin, attention wise, narrative wise, everything. And I felt like I started to get a hold on like this is how the rules are going to work. And so like I remember there was a slew of like after every time there was a runner, you started to see, for example, like you know uh, critical mass would hit a certain amount of volume. It would get to a certain point where that's usually where like the first level of resistance would hit. And so I started, like I think the first few runners I hit, I would try to trade and scalp off these levels. And then I just realized I was like, you know what? You either are in the trade or out of it. And I would develop a thesis for like what is going to cause this to have multiple weeks of mind share. And so I would be wrong. I'd bet big on something. I would take a loss, do it again, wrong, take a loss, and then I would have something come up and it would hit. And like I knew typically the main like indicator that really was like not able to be broken by most coins was like when perps listings hit. And so I would hold really if I believed in something and I got in early enough, I was comfortable holding all the way through regardless of what price level it would hit until I saw perps listings. And then I was just like, okay, like I want to believe this time is different, but I need to at least de-risk. And so that was where I was able to really start to build up a stack of like stuff I could work with, which then allows like a domino effect of starting to take bigger bets on you know, a variety of different areas. So I don't know if that like fully answers your question, but I would say it was really a matter of just like having been through it on the side of being reactionary and starting. And when I was early to the momentum shift of meme coins, like I realized, okay, I can start to see indicators coming up that are pretty consistent. Like they don't hit every time, but more often than not, I'm going to be right with the trajectory of these. And so I'm willing to bet big and be patient and just hold and avoid like the day-to-day TA on things.
Got it. Can you talk us through the process of that sizing in? How are you allocating? What percentage of your port are you using on a token like WIF? Are you going all in over the course of X number of trades? Are you sizing in over time? How are you thinking about that allocation process?
Yeah, I mean, that's a great question. I want to be very clear that like that depends on market conditions and it depends on like where we're at in a cycle and what the other factors are. So like I can give like my answer to this during 2023 and 2024 very different than what I would say right now is going to be effective, just because of the way the market has changed. Um, but I would say like what I did, and I'm very thankful for with and a couple other trades like Cost and Flog was a huge one for me. But like before I like when I was still just trying to build my port up from pretty small to like having breathing room, I was much more careful about uh, like profit taking levels. And so I would not size in more than 5% of my 5 to 10% of my port on anything. I would be very careful about making sure I got initials out as soon as I got out of the phase of being like, okay, I'm worried I could draw down to zero. Like I hit a couple big wins. Whiff was, I hit 100x on whiff, and that changed everything for me. Um, because I was able to get to a point where I could say, okay, I have X money set aside in USDC or Sol. I can take whatever percent, like call it 5% of my total port, and I can be hyper aggressive with this because if I run that to zero, it's like that's one wallet I've created, but I'm not being hyper aggressive with my entire portfolio. So like I kind of view it in like phases of the cycle where I built up enough port that I could have like my main portfolio kept safe in majors, stables, whatever. Um, and then I would basically create wallets and I'd be hyper aggressive with those. And I would be willing to, based on my, conviction levels, how early I thought something was, how much, like momentum I thought it had, I could say, okay, I'm willing to put 50% of what's in this wallet into a certain trade. And then like, then I'll determine what I want to do with it. But because I had basically created like compartmentalization of my portfolio, it allowed me to like take on a much more aggressive mindset, and I could say like I am trying to like 10 to 100x this wallet as opposed to I'm trying to 10 to 100x my whole portfolio. There's too much risk in the latter, right? um, so I found that like the early days of wallet splitting helped me a lot to kind of manage things and compartmentalize like how much risk I wanted to take. um, and I think the beauty of like, if you can hit on those first few steps to grow your portfolio, then you can take the smaller amounts that you compartmentalize and you say, okay, like these are my goals. This is how much I'm willing to lose. And this is what I'm looking to accomplish with it. And so like, obviously I was able to take certain like, slightly larger amounts and do more speculatory bets that I could spray and pray. But I've also always been selective where like, I'm not one of these terminal traders who's like, buying 100 coins a day. I'm always sitting there waiting patiently, trying to find something I believe in. And then if I really like something and I feel like I see some of these indicators I've seen play out with other coins, that's when I would go all in with said wallet and really try to see if I it can break through. And usually with that strategy in the early days, I was not selling for 2, 3, 4x. I was basically saying once I hit a runner, once it hits escape velocity, I'm going to see how far this can take me until some of the bigger indicators hit, like, hey, the Binance perps listing or whatever. Like, if God forbid it should get there, I'll be so lucky. Um, but that was my mindset. Like, okay, I'm really going to be hyper aggressive and trying to play for the big win, the home run swing on this smaller wallet that I have. And then I have conservative investments with the majority of my portfolio. Um, I don't think you can do that as well now because the conditions are very tough and there's just not escape velocity on coins right now. So I think you have to take slightly different approach, but like that's how I hit a bunch of my like, big runners that really were like kind of my life-changing, game-changing trades that put me into different kind of category of like what I was trying to do. Um I don't know if that answers your question. It was a little long-winded, but like um I'd say like the compartmentalization of the portfolio is really like what allowed me to hit as many runners as I did.
Got it. That makes sense. That makes total sense to me. And do you think that that's a process? Like, is that a process that you kind of figured out on your own, or was that like a suggestion from one of your mentors?
It's definitely different than what I think most people do. I think that at the time the conventional wisdom was probably like, hey, like, once you get to a 2x, pull out initials and then ride the moon bag or whatever. That's what I heard a lot. I would not do that. My thought process was like, because I've already kind of like diverted my compartmentalized my portfolio, like the goal here is not a 2x. And the reason I wouldn't do that, even though it was conventional wisdom from people in group chats I was with, from people on Twitter, like I think that was kind of the idea is like that's how you protect capital and still go for big hits. But to me, the idea is like if you think about it like a baseball game, a baseball game, like Hall of Fame hitters are going to be batting 300, right? Like the game we play is it's improbable bets you're making where like you are not going to be right 50% of the time plus. So if you are taking out initials, you are reducing your upside capacity and the times that you do hit and you're right, which is going to be less than when you're wrong, you're actually limiting your upside. So for me it was like even if I was up 2 3x, I probably wasn't selling that unless I was back down to like break even um, because I knew I had a chance for this to escape and really do something crazy. Because at this point in time, like what other place in the world can you turn, a small amount of money into a 10, 20, 30, 50x in a short amount of time? And so I still do believe this is true. I just think it's not good conditions for it currently at this day and time. But like for me, I think you are basically trying to stay alive in this game and make sure you don't draw down to zero. And you're trying to basically bide your time until you can find one of these opportunities where something can run 50 to 100x. And you are going to make the majority of your gains in a very small percentage of the trades that you make. So for me, it's like I'm totally okay mentally with round tripping a 3x and not making any money or even ended up losing money on it rather than the idea of fumbling. You guys have that feature on FOMO, the fumble feature, right? Where it's like how much this person could have made. A lot of the time it's like, hey, I didn't want to be greedy, so I sold for a 3x, but shit, man, if I would have held, like, I would have been up 50x or whatever. And so I think there is like a probabilistic argument to be made if you know how to select coins and you're good at token selection, that it's actually in your best interest not to sell for small gains, but to give yourself a chance to hit the home run. And that's why I get made fun of for diamond handing and being a bag holder. It's because I have many instances where I was up big. I didn't sell, and then I ended up round tripping. Um, but the few times where I was up big, I held, and then it ended up going up a lot more than made up for, um, the round trips. And in order to hit these, you have to stay in the game and give yourself a chance, I think.
I want to make it clear that I don't think anybody is making fun of you for being a diamond hand or that will sometimes round trip. I think it's like people are coming at it from a perspective of just like total respect because the ability to do that is unique. Most people can't do that. You see some gains, especially if you've just gone through a period where all you did was take losses. You see some gains, you want to lock them in. It's really, really hard to counter that. You know, it's really hard to sit on your hands and just let something play out. So you kind of answered my question a little bit, but I kind of want to also give you a chance maybe to elaborate a little bit on. So you were in Whiff, obviously huge play for you. You had I was scrolling your feed. I went back to like the early days of your feed and was just kind of
Yeah.
looking at all the different tokens you were in. And one of them was Unicorn Fart Dust. You were wildly bullish and for good reason. It seems like perhaps that token didn't quite do what you anticipated. Is that true?
Well, well, it did. I mean, I think so. I was in that probably. I think I think I missed the night that it came out. I remember there was someone in a chat scanned it super early, and I remember, that it was so different back then where you could top blast. And I felt like top blasting into strength, like buying into a green candle when something was strong, was generally more successful than like trying to time dips because back in AI season or like this was, I think that was post AI season. I can't remember exactly, but like you know, if you were waiting for the retrace, sometimes it just didn't come. And so I remember like a bunch of people in the chat I was in at the time got in much earlier than I did. But I saw it for whatever reason, it resonated with me. I was like, man, this is kind of like the guy reminded me of the GameStop guy. What's his name? Roaring Kitty. I was just like, there's just
Totally.
something unique about this. So I top blasted a bunch of size into it. I probably bought like 1% at like 6 or 7 million market cap. And then it ran all the way up to like 20 that first night. And I think on a retrace, I just kept adding. So I bought a ton of size. And then it did run to like 250 or 300 million market cap. Um, and I did poorly time my exit because I think I got caught up in like at the time there was a whole bunch of like some people were trying to, this was while Fartcoin was kind of like the main leader in everything. And I sort of fell victim to the idea of, man, this overtakes Fartcoin. And I sort of like, I think if you were looking through my timeline, I was kind of like throwing shade at Fartcoin, and maybe I was wishful thinking because I had a huge bag. I was trying to uh like believe in my own narrative that I had kind of crafted up. But no, I mean it ran really high, and then the market kind of tanked, which was, I think that's the other big lesson is like no matter how strong you think your coin is that you're in, nothing is really nothing is strong enough to fight the direction of macro. And so, you know, there was a big problem in that, like, I think when it was around 250, 300 million market cap, there was a huge retrace. There was a bunch of shaky stuff happening with, I forget whatever the political environment was at the time, but like maybe this was during the tariffs shakeup. I'm not sure exactly when, but like, you know, that was a problem where I tried to hold through like macro headwinds. And I still ended up getting out. I made a good trade on it, but like I probably didn't realize the top end of it. That's To me, that's like a good example of where even though I had a large position that could have been, a really big win. I didn't optimize it. I probably took like a 40 to 50% haircut before I actually sold from where the top was. However, like the thesis I had was, you know, if it had busted through the resistance at 300 million or whatever, you had a chance for this to really do something crazy. And unfortunately, macro didn't line up with it. Unfortunately, the narrative wasn't quite strong enough to like get through the mind share, attention span deficit. But like, I still made a good trade because I got in early enough and I had and identified there was a narrative there. Um, and even though I didn't optimize it, I would say like, okay, there was a chance, call it 5%, 10%, that could have really been the thing that had taken over mind share, all of crypto, and been one of the big meme coin trades of the cycle. And so, I wish I made more on it, but I still made a good bag. I took a risk and it was calculated and ended up having to sell for a little bit lower than I would have liked. But yeah, man, I was all in on that. I went full degen on Unicorn Fart Dust. I thought he was the next GameStop. And sadly, it was not the case.
I mean, I'll admit, I was watching his live streams too. It did feel that way for sure. So I think you were right in kind of going down that road. Was there a specific moment when you knew you were wrong, or when you knew like I got to get out? Was it a price point that it hit that you just said no? Below that, this thing isn't coming back, or was it just a feeling? What was it that was there a specific thing that got you out of that trade?
That's a good question. This was so long ago. I'm trying to think about what happened with it. I know that it had like, I'm not a huge TA trader, but like there's some of the critical fibs that you'll see. Like it had its standard 60% retrace. I say standard, that's obviously like a crypto specific thing, but like it's very normal for like a 60% correction. Usually, if it doesn't hold that line, then you're probably going to see an additional 20 to 30% correction. And then a lot of the times from that point, uh, success and sustainability of the token surviving is probably less than likely. And so I think I held firm all the way through that 60% retrace. And then it did bounce. And I remember I was hopeful that it was going to have a stronger bounce, and it didn't. And so, I think at that point is when I really got out and fully de-risked. But I think in retrospect, there were probably indicators that said, "Hey, macro is really sensitive right now. It's going to make it harder for the rebound to happen." It was also a mind share token, like numbers on his stream were going down. Total volume started going down, and these were some of those indicators that now it's like I probably take a little more seriously. And I think you have to now because just in general, like the ability for these tokens that are mind share based to fight through like those indicators of lost mind share, aka like volume bouncing, like hard bounces on the fib levels that they're supposed to bounce on. um I think in the early days you saw coins like WIF that just didn't care, and they would just they would get front run, and they would kind of go through resistance areas where they weren't supposed to. It's gotten more and more likely that like the probability of surviving those lost indicators has gone down over time. So yeah, in retrospect, I think when it didn't bounce hard off of the 60% retrace, I think I would have gotten out quicker. But I don't regret holding through to that because I think it was I think that the risk of like constantly scalp trading back and forth and trying to time tops and bottoms is like, you got to be really good at that. There's a lot of things that can go wrong. People can manipulate that because these are ultimately low liquidity tokens. And so I think you got to be careful on things where some people are TA traders, some people are like investors, and I'm more on the latter side. So like, I'm not going to get into trying to like trade each fib and buy and sell at each level. That's why I'm trying to get into something as early as I can, and I'll ride it out. And I just don't think about like, it's unlikely I'm going to sell the Pico top, but I'm going to give myself as much chance to run and see if I can hit a home run. So
Got it. Okay. So what are your like highest conviction signals for sizing into a trade? What specifically do you look for? Could be could be anything. Could be like a feeling, a gut feeling, whatever.
Yeah, I mean, for me, I would say, like, I think you have to develop an authentic understanding and whatever you want to call it, a thesis, conviction on why you're buying the token. Why are you buying this? Like, is it something that actually connects with you that you feel, or is it not? And you're just, you're just kind of chasing whatever else is happening. You think there's attention on it. I would say for me, when I really connect with something, I have a feeling that like this thesis makes sense to me and the market seems to agree in the early stages. That's when and this doesn't happen a lot, but when that happens and both of those things align, that's when I'm going to put size in and I am going to really aggressively position into something. If I don't see both of those things align and it's just one or the other, like I'm going to be much more cautious with my sizing and I'm going to be much more careful about my entries and exits. Um, the example, I'll give you a couple examples. Like, um, if you remember in the last couple of months, Pump Fund had this like CCM meta where it was all these streamer coins coming out, and a couple of these things ran to 30, 40 million overnight. And then there was just these nasty retraces. Um, it was the first time in a while we had seen coins really running. And so, of course, I was feeling FOMO. I was watching the market kind of react to this stuff with the weekend that everything was running. And I was like, man, I just don't see it. I don't understand the sustainability of this or like what happens after the first 48 hours. Why are people going to continue to care about, this creator coin? But I wanted some exposure just in case because we were dry. There hadn't been a meta in a while. So like in that case, it was like, okay, I'm going to take a stab at some things, but I'm going to size down. I'm not going to put, huge size into something. Or if I do, I'm going to make sure I'm really paying attention and I'm going to get out as soon as I see any type of negative indicator. So that's what I did. I think there was a few coins I, lost a little bit of money on where I took a stab at them. I can't remember. I don't know if you remember the main CCM coins that ran. There was
Bag work.
the
Bag work.
guys who, yeah, Bagworks. So like, and there was one that was like a platform token that was like all the creators in one, that ran to like 40 million. I don't remember what it's called. But yeah, so like Bagworks, I got in and then it just, I just didn't connect with it. And I also saw like I just didn't know what like the sustainability was going to be. So that was one of those ones where I was like, man, I might be selling and missing out on like a huge runner if this meta really sticks, but I just didn't trust it. So I think I cut 20% loss and got out, right? Um, on the flip side, I would say like take Zcash. This is not a low cap, it's not a trench coin, but like I have a lot of conviction in Zcash and the reason that I was willing to size into it was because I had both of these things colliding where I was like, I saw the market reaction. I saw like how much mind share it has on Twitter. I saw how much volume is steadily increasing, how the shielded pool is increasing. And then I was, going down the rabbit hole and I'm like, man, this all just connects with me. So that's why I sized into it because I was like, both of these things are happening. Like I can fundamentally understand like why I would want to hold this, why it makes sense, why I could keep picking up steam. And the market was suggesting that it was being chosen to be something that was going to have sustainable mind share. Um, for me, it's like finding the balance of those things. Like you can't really force either of those indicators on top of each other. Like it will be very clear if uh, if the market agrees with you or not. The ones you have to be careful for, another one that's similar is like ore. The market seemed to agree that ore was going to be a runner, and it had crazy momentum. Um, However, it was being propped up on like, the more you dug deep, it's like you're starting to realize, okay, there's a lot of people chasing this. And like, does like who actually has conviction in this being sustainable? If you're asking around questions, the answer you get is kind of like, who cares? It's a good Ponzi or whatever. Like, there's no one who really believes in kind of what they're buying size in, to me, that's like a little bit of a yellow flag where you say, okay, this has a chance to run for sure, but I don't know if I'm going to be able to really time this because like this is all driven by momentum. Like no one you talk to had conviction in it. And those are the scariest trades where you can really get hurt, I think, because like you are trying to PvP a momentum battle where everyone is trying to get out before the other person. And those are the things that can definitely run up hard. And like some people are really good at making those momentum trades. I'm not. But like when you know it's just like a ticking time bomb and it's going to go up fast and it's going to go down fast, to me, like I think those are trades that I'll personally choose to avoid. Um, because unless you're really good at timing things and you're really locked into what's going on, it's really easy to get burned on that stuff. So,
Okay. Yeah. What tools should newer traders adopt?
that's a good question. I mean, the follow up question I'd ask to you for that is like, for what type of trading? Are we talking micro, like low caps or um, like I think it just depends on what your goals are.
I think let's stay focused on the type of trader you are. Finding big conviction plays that you can size into, believe in, and hopefully turn into 100x.
Yeah, I think, man, I think are tools are kind of like a double-edged sword. Um, like me personally, I don't use terminals. I never really have. I've played around with them, but like it's just something I avoid. I recognize that like this is how a lot of people are going to find things early. Um, but I think those are so momentum based that it's almost like using the trading terminals has almost turned into like Fortnite style, right? Where it's like the goal is speed and the goal is like frictionless, like a lack of friction. And that's good in that it can help you beat someone else to an entry. But for me, like the tools I'm using are more like indicators of sustainability. What can I buy and then I can hold and not have to like go to sleep paranoid about holding it overnight. And so for me, it's like I don't mind having friction on the actual trade execution because it's almost like a good reminder to me of like, hey, do I really want to buy this? I have to go through a couple more steps. It's going to take a little longer. Like it just gives me an extra couple seconds to think about what I'm doing. So, you know, I'm pretty old school. I use Jupiter, Phantom and Jupiter to swap for a lot of my stuff. Um, I'm like I use Bird Eye for most of my chart, Bird Eye and Trading View. Um, I do think like especially once tokens get to a point where they're mid cap or large cap enough where they have perps volume and they're on centralized exchanges and everything, that's where you can start to do a little more digging and it can be a little more materially helpful on like a slower thought process mindset of how you're going to do things. Because like to me, when you have macro tailwind, so let's say like next month Bitcoin recovers and the market is kind of like breaks its downtrend. I hope this happens, but breaks its downtrend. It's going back up. What you're going to see is like that's when the indicators are going to be important. Okay, like where does volume spike on some of these coins comparative to other coins? That's an indicator of interest. It doesn't mean price is going to immediately follow, but it shows you where like liquidity and mind share is. Then you can break it down. You can use like I'll use CoinGlass for example, where I can look at liquidation heat maps, or I can look at like one thing I love is the difference between like the perps volume versus spot volume. And so like one of the things on the first Zcash run up that was really interesting was you had all these people trying to short the coin because they thought it had gone up too much. The run was crazy. It had shot from $90 to like $300, in the matter time span of a week. Um, but when you looked at the data at that time, the data suggested, well, there's a lot of people shorting, but it's actually a spot driven rally. Like it was a ton of spot buying and really minimal perps activity on the long side. So for me, it's like, again, I'm not making a determination based on one thing, but the amount of volume you had, the fact that it was spot driven versus perps driven, um, that was significant to me to say, like, okay, I actually don't think this rally's over. I think it's safe to buy into the strength. Sure enough, it ended up running all the way up to like $700 or whatever. Mind you, I'm once again, I hold things too long, so I didn't sell anything on that run up. I'm still holding everything. Um, but like I guess that would be like a good example I would give of I developed the thesis independent of any price action. I liked that. I like the thesis around all that. However, when the run was happening, I was able to kind of get an idea of like, these indicators suggest there's room to run on this leg up, right? You can do the flip side, like, if a coin is rallying, but it's just primarily perps driven, um, doesn't mean it can't keep running, but it's scary because, a lot of times that can mean stairs up, escalator down. Um, so I do think on uh, like altcoins, majors, high cap memes, those are pretty good indicators that I follow. On low caps, it's a totally different ball game. I can't tell you right now anything sub 10 million. You're kind of going to be subject to. I'm sure it's more in this terminal trading world, and that's just not my. It's not my game that I have an edge in. So
Okay, cool.
I'm
Are
on
there
those coins. I'm just going to go with conviction, and I'm going to say I like something. Uh, I'm willing to take a bet on it, and I'm going to let all the fuckery happen, and I'll see if it's still alive, and if we have a shot to have it run.
for sure? Are there any absolute red flags that you would recommend newer traders try to like avoid at all costs?
Absolute red flags. Let's see. Yeah, I mean that's an important question. I think I would say as a general rule of thumb, like it is okay to go slow. Don't think you have to get sped up. Um right now, I think it is very, very risky to size into something on the first run up. Uh if we're talking micro caps, like if we're talking things that are sub 1 million, sub 5 million even, Um, I think unless you feel very confident that you're really early, I would be very hesitant to size into something that low on the initial run up because we just know all of the problems that exist right now with bundlers, with like imitation token, like the PVPs that are going to happen. It's a battle, it's a land field of landmines that you're going to go through. So even if you think it's a good narrative, I just think there's so many factors you're fighting against that you're better off waiting, and you will, like, 99% of the time you will get a second chance at entry. So if you're feeling FOMO there, I would just say just wait, and you're going to get a chance to see if it survives and if it has another leg. um that said, like, if you're just playing the momentum game and you're trying to get in before someone else, that's different. But like if you feel like you're late to something and um, you're feeling that FOMO, I would say just wait and you're gonna be fine. You're gonna get a chance to enter it. That's like the most common mistake of early traders is feeling that FOMO on an initial run up and then uh sizing into it, like once you've been sitting there watching it go up, and then all of a sudden you're like, shit, man, I need to get in this. There will be a time where you can do that. Like AI season was a time you could do that, but you need to see confirmation of multiple other tokens doing it first, where they can sustain a run. Right now is not the conditions for that. So that would be my advice is like, don't feel like you have to FOMO into something on the first run up right now. Um, unless you're just confident you're really early, or you just feel like this one is really truly different for a legitimate reason. But don't just chase it based on volume or based on other people buying it.
Great. I'm going to leave you with one last question. If you're just starting out right now, or someone's just starting out right now, what's the advice that you're going to give them that is, in your opinion, the fastest path to like competence as a trader? What types of metrics should they be monitoring? What what like basic skills should they be really focused on developing?
Patience. I think patience is the biggest thing. You're going to see a bunch of examples of, there's someone who's going to hit a big trade every day. There's some token that's going to be what everyone's talking about, and you're going to feel like, "Oh man, did I miss it?" But like there's always another trade, and the reality is like most of the time you make the decision to get into these, they're going to be losing trades. So like don't chop yourself up trying to trade everything. Wait until you feel like you have a good opportunity, until you feel like you have a good entry, and that's when you want to go hard on something. But I think patience is um, it sounds so obvious, but it takes so much discipline. It's so hard to do. I think a lot of the best traders in this space are they're chronically online. They're watching everything that's happening, but 90% of the time, maybe even 95% of the time, they are not actually in action. They're waiting for an opportunity. And I think that's the biggest thing is like find other things to do. You can't just be a trader. You have to have other things. So stay in the space, like know what's going on, try to follow everything, but it doesn't mean you have to trade everything. That would be my biggest piece of advice. Like my early days, I got burned trying to chase everything. And then eventually I slowed down. It was like, okay, I'll know when I want to go hard. I'll feel it. Everything will add up. But I think just accepting that you don't have to trade everything and that it's okay for there to be winning trades that happen that you weren't in. Um, that's kind of one of the keys to success in this space, I think.
Awesome. I think that's great advice, and I think it's a great place to close this out. Swizzle, man, I could talk to you all evening about this. I really, really appreciate you taking the time to come in here and chat with this little group. Um, really means a lot to us for sure, and would love to get you back in here at some point in 2026 if you'd be open to it.
For sure. Hopefully I'll have a green P&L on FOMO at that point. Maybe don't bring me back until I've earned my respect.
Fair enough. We'll do it. Right on, man. Well, again, thank you so much for being here with us. We really do appreciate it. I'll get this up on YouTube and so that we can all share it, and anybody who wasn't able to tune in can tune into it. I hope you have a great new year and very profitable 2026. Man, it was a pleasure chatting.
For sure. I appreciate it. Yeah, I'll see you guys in the order books.
All right, take care.